What's up, bulls? Let's take a look at some of the charts today and see which way we think the price of some cryptos are going. We'll start with Ethereum. Hit that like button, hit that subscribe button, by the way. I'm going to start making this channel a lot more about crypto trading because it's about accumulation to me. If you can keep accumulating Bitcoin, Ethereum, etc., without having to actually put in more money, that's the name of the game. That's a big name. That's a big part of the game, I should say, especially in a bull market. In the bear market, I'll pump cash in for sure, but in the bull market, I'm a little tighter with my cash and I'm more trading. But I trade all the time, bull or bear market, because when you do trading like this, you can accumulate Bitcoin and Ethereum when the price goes up, of course, but you can accumulate it when it goes down too. So that's some things I want to help start sharing with people because that's what's been so powerful for me. Now, right here, today is Sunday, September 19th. Look at this. See these green dots down here? They indicate bottoms, and the red dots indicate tops, right? Because, like, say this red dot right here indicates a top before a come down. Now, we're not talking about the top of the entire market or the bottom of the entire market. We're talking about local highs and bottoms. That's what they're called, local. So, and this is on the 30-minute time frame. Okay, so it's a decent amount of data. The lower the time frame, the less reliable the information. But the higher the time frame, the more reliable the information. Generally speaking, what you really want to see is you want to see multiple time frames line up and give you the same indication. So I'm on TradingView. This is the price chart here, and this is my special indicator, my custom indicator. I'm actually working with a developer to have a way to share this with you. So I'm working on getting this put together so that I can actually share it with you and you can have this indicator, because when I look at the price chart, I can't make decisions off that alone. I need indicators. First of all, all these lines and these colors you see here, this is a Fibonacci retracement. And it's based off of previous highs and lows of Ethereum in this case. This would be this zone right here. See this green line and this fuchsia line? This is called a golden pocket. And this is usually pretty significant. And these other lines are significant too. As you can see, they've been pretty steady. I mean, look at this. This top came right off of this Fibonacci line. If we scroll back, this top was basically on this Fibonacci line up there too. See it? And look at, so I'll show you how I place that trade, how I place that trade, how I place that trade. I didn't place any over here because I wasn't strong enough, but I used the indicator. Let me show you real quick. So you see up here, this called the top. And by the way, it was right on one of these Fibonacci lines. And then the price kept going up, but the blue waves were going down. These blue waves are really momentum. I call them momentum indicators, really. See, it called the top here too. But the red dot was much lower. And then it gave another red dot up on a Fibonacci line, which I call a level, right here. And it's lower still than this red dot over here, right? So the momentum's going down, but the price is going up, and we hit a Fibonacci line, which is usually a significant spot of support or resistance. In this case, resistance, since the price is going up. So I saw this on a 30-minute time frame, which is a good amount of data. Saw 3 of these come up, and I'm like, all right, we hit a zone. I am placing a short, which means I am betting that the price is going to come down. And for every dollar, and I actually do leverage on it. So say I put in, because I'm playing in Ethereum. So say I put in $1,000 of Ethereum and I do 10x leverage. That means I have $10,000 in this thing, even though I only put up $1,000 of my own Ethereum. So I have $10,000 in it, and every dollar it goes down, I accumulate more Ethereum. So in this case, this went down, what's it at here? Call it 36.50, and went all the way down to here, 33.75. Let's just round it off and call it $300. So that's about a 10%, let's call it a 10%, it's not quite, but let's call it 10%. So what happened there, since I put in $1,000 and I did 10x leverage, which means I had in $10,000. So all my gains are based off of $10,000 and I get to keep the gains. So what's 10% of 10,000? It's $1,000. On this move, I would have doubled my $1,000. I would have turned my $1,000 into $2,000. That's how powerful this is. On the way down, that's what I did. So I started up here with, this is, for instance, I have more than $1,000 of Ethereum, but just to keep it easy, up here, I had $1,000 of Ethereum. Down here, I had 2,000. because of trading leverage. This is what I'm talking about. This is the power of this. This is the power of trading. Now, trading is risky. But it's a learnable skill. And on this channel, I hope to help you learn how to trade. Do I win every trade? No. But what's beautiful is like, oh, well, what if that price had went up? Well, I have a stop loss set. What a stop loss is say, hey, say I got in at 36.50 and I said, hey, if the price gets to 36.85, just automatically stop me out. Just close my trade, right? Because so I can really limit my downside that way. And say I got in, down here. Which I don't know why I would. Although right here wasn't a bad spot. It's in the Fibonacci golden pocket. There's a dot here. I'll have to scroll back some to see if there's not enough data to show me. Oh, back here though, look, we're hit around this Fibonacci line, kind of in this little zone here actually, which is why you're seeing these lines, because this was a different Fibonacci sequence. So this is a different pocket in particular here, and then down here too. So you can see that the price is coming down, right? So there's a green dot, but then the price came down even lower, but the dot was higher. So I said, all right, and here's where I saw it, right here, is really where I was like, all right, this is for sure now, because the momentum is going up, but the price is going down, from here, which is this bottom. So this is a lower bottom still, but the momentum is going up. So I'm like, plus we're at a level. And I said, all right, here we go. So to make this easier for you to understand, because you'll probably understand when price goes up, you make money. The price going down, making money might be confusing you a bit, but it's just the exact same thing. So right here, hopped in at, I didn't hop in at the bottom. I think I got in at like 32.20. No, maybe it was 32.30. Anyways, but I knew it was going to go up. I didn't know how much. It might get stopped. It might hit this, because it's got several resistances to go through before it gets to before it turns around. So or before it gets stopped. So it's got this resistance, this resistance, this resistance, this resistance, this resistance, but it made it all the way up here, which is amazing. So down here, let's say we got in, let's say we just got in at like 3,300. Let's just say we were late to the party. I don't like to get in that late because you never know how high it's going to go. I like to get in as close to the bottom as possible, and that's why I have these levels drawn. But say we got in at 3,300 just to keep this easy, and we got out at, let's say we got out at 3,600 because we just wanted to take our money. So we made, let's just call that roughly 10%. Same thing. Say I had $1,000 of Ethereum down here, went from 3,300 to 3,600. We'll just call that 10% to make it easy, even though it's not quite. So same thing. If I'd done 10x leverage, I'd have put in my 1,000, but I actually would have been trading with 10x leverage, giving me $10,000. So I'm making all the gains off of that. Say this goes up 10%. 10% of 10,000 is 1,000. So now I turned my 1,000 into 2,000. And that is not a crazy trade. I mean, is this a 10% move over a few days? I mean, when did this start? About noon on the 13th, we'll say, and then up here, it was about almost midnight on the 16th. So about 2.5 days for it to go up or down 10%. It's a pretty common thing in crypto. And if you know where to enter, where you know how to enter where you have the highest probability, then you got some good stuff. I lose trades, but I never lose big because I set stop losses, right? So what I basically do is I have little losses, I have little gains, and I have big gains. Like those are the only three things that I have, and you can do that by automatically setting stop losses and automatically setting take profits, which is saying, all right, well, I was down here, I was up here at 30. Now this is a trade I did make too. Went from here because again, same thing, right? Look at this dot here. See that green dot? So here's the bottom, and it started going up, right? And then we made a lower low in price, but we made a higher low in momentum. See, the green dot is higher. And then we did the same thing here, and that's when I was like, all right, I'm in. So actually in this trade, I got in like here, and then it went up some, and I sold, and then it went down, and I bought in again, and I sold, and it went down again, and I was like, all right, I think that's probably about it. I think that's probably going to go. And then it went. So I did pretty good. That was a fun one. That was a fun one because I really liked doing this, but I don't necessarily do that all the time. So this one went up what? I think my final trade that I held on to was at like 33.80 something. And then I took profits along the way, and my final one was like around 35.20s. And then I got back in here. And because again, same thing, look at this 30-minute time frame. Look, there's a red dot, right? Red dot. And here's the top, here's a high. but then we have a lower red dot, but a higher high. And we came right to this level. So I'm like, all right, this is going to go down. And it went down right into the golden pocket. And it rolled around there for a bit. And you may be thinking, well, wait a minute, these green dots are going up. I was like, yeah. The reason I actually didn't take this trade was because you see there's not really a clear lower low. Like, see, like, okay, that's low. But then this is a higher green dot, but the price is about the same. And this is a higher green dot, but the low is actually a little bit higher. So I was like, I don't know. I don't know about that one. And then this, you could look at it like this. See, this is you could see it as a continuation from this, but I didn't necessarily want to do that either. I thought it was going to kind of ride sideways here for a bit. But now we've got this going on, right? We've got this low here with this green dot that's down here. And then we've got a lower low, a significantly lower low with a noticeably higher low in the momentum. So what does that mean? I don't know. The one thing about this is see how it's not really hitting a level, right? It's not really coming close enough to one of these lines for me to think that this is a significant level of support. So I have not taken this trade as much as I kind of want to. I just don't know. I'm waiting to see what happens. I actually have a feeling it's going to come down here and we're going to print yet an even higher green dot, and that will be a strong signal to me that we'll go back up. So let's go over to Bitcoin. We'll use the Coinbase pair. Now let's see what's going on here. Run through the same things. I got some Fibonacci lines drawn here. Where's the pocket? There's the pocket down there. So let's move this up a little bit. So you can see, let's go through some examples here. So you can see right here. Here's a good sign, right? So this was on the 17th at about 7 in the morning. You see we hit a bottom, a low in price, and we have this green dot down here indicating it. But then over here we hit a lower low in price, but the green dot is higher. And we're around one of those levels, the top of one of the golden pockets. So that's a strong signal. And then we have that green dot and that green dot. It did kind of the same thing as Ethereum when I showed you on that last trade. And then of course it went up. Now it didn't quite get to this line up here, right? But it did bust through this one. And it just didn't quite get to this one for some reason. But you can see it printed a top here, and then it just kind of rode that for a bit, and now it's come down. Now we have a lower low here, right? And that green dot, and then we have a lower low than that and a higher green dot, and it's around a level. And so I did not take this trade either, just because I was not paying attention, because it was, I was a bet. But looking at it, it didn't take off. It took off. It made some gain, but it didn't quite take off all the way. And that kind of makes sense to me because this one didn't come up here and hit this Fibonacci line. And then it came down. Now, I couldn't have called it coming down here, but it really looks like it was just kind of a continuation of coming down from up here. But I couldn't have called this as a coming down either, really. I wasn't in, I don't think I was in on this trade. I was in at this time frame in Ethereum, but I don't think I was in it in Bitcoin. I should have been. But I take profits along the way. Like I'll take a profit there. I'll take part of my trade out, part of my trade out, part of my trade out, and then I'll let the rest ride and just set a stop loss, right? For like, say when I made this trade, say I would have got in at, 47,000, and I would set a stop loss for like 46.8, something like that. But you can move your stop losses as the trade goes on. Like as the price gets here, okay, well, I've made some gains. I want to lock those in, so I set my stop loss. So I move my stop loss to here. And as the price gets here, all right, I set my stop loss to here. As the price gets up here, I set my stop loss to like here. And I usually do those based on, like, say the price gets up here, I would move my stop loss to probably about here, because this looks like some kind of level of support with this price kind of hitting there. And I'd still be happy to take that home. Stuff like that. So that's what I plan on doing with this channel. Follow me on TikTok too, because I'm going to start making this all about accumulation, because that's what I want to help you guys do, because that's what I do. And the biggest ways I do it is through trading like this, because I can accumulate on the way up and accumulate on the way down. And I can accumulate multiples, like when I do 10x leverage. But this is risky, so you need to have proper. You need. It's a learnable skill, but you need to practice, right? So when I got started, I just had like $200 of like Ethereum in my account, and I just used that to really make trades, because learning it is one thing, but really getting in there and doing it, your heart starts pumping sometimes. even over 200 bucks. And so you place, yeah, that's what I did is I put that in there, and I started like taking my wins and my losses and learning and learning and learning. And what I just shared with you is really what has worked best for me so far. Is like I said, like with that Ethereum trade, I was in like I don't know, like I think I had like $12,000 in there, so I made some pretty good money on that one. But when I say money, I mean Ethereum. I made Ethereum, which is way better than actual money in my opinion. Fiat, I mean, better than fiat, of course. But it's just amazing when you can come in here and say you got $1,000 of Bitcoin, you 10x leverage, and it goes down. You get in up here. Although I wouldn't have got in up here because there's no indicator showing me. It's not at a level. There's no divergences happen. Granted, this is the 30-minute. Let's go look at the 1 hour. See if that's any different. You can see here that but it's not at a level, but it came down to a level. So this one's kind of confusing. I probably wouldn't have taken this trade. I don't think I did. This one's interesting. Oh, there we go. That's interesting. So now we didn't see, let's go back to the 30 real quick. Did I miss that? Let's go back to the 60. Oh, interesting. Wait, was it like that on the 30? No. No, it wasn't. But we go to the 60. That's really interesting. And the higher the time frame, typically the more significant it is. You can see this red dot here, indicating this top. So it's back on the 15th. But then you see this making a higher price high, but a lower momentum high. That's why you get this red line here. Again, I'm going to find a way to share this custom indicator that I have with you guys. So be sure to subscribe and follow me on YouTube. So when my developer gets that done, I can share it with you. But you can see it made a higher price, but a lower momentum. And this is so sometimes these waves you got to follow them over days. And so that's why it came down. That's interesting. And that's why you got to look at multiple time frames. See, these are things that you learn. And I would, if the 30 didn't really show it to me, but the hour did, well, I'm going to take the hour over the 30 because an hour is a higher time frame, so it's more significant data because there's more data in an hour than there is in 30 minutes. Very interesting. Very, very interesting. Actually, now let's pull this down to the 15-minute time frame. Maybe the 15 showed us something interesting. Look at this. Look at this. So it printed a red dot right here, right? And it printed another red dot right here. And it printed another red dot right here. So this price is higher than that one, of course. But this price is also higher than that one. But you see this red dot's a little bit lower. And then you see this red dot print. And this red dot is significantly higher than this one. So now it's like, oh, that's interesting. So there, but it's not at a level. So it makes me a little nervous, but I may have taken that one because this wave plus the money flow is, you can kind of tell, you got to kind of not, you wouldn't be seeing the rest of this, but you can see when it gets this high, that's kind of possibly a peak, meaning it's going to start coming down, and that's exactly what happened. And the money flow still seems to be down right now. So right here was a little upward signal, and we were at a level that was that one I showed you before. This is the type of stuff I'm going to show you. It just takes repetition. Okay, hit the like button, hit the subscribe button, follow me on TikTok too, and links for a lot of good stuff in the description. Like there's a debit card you can get that you get Bitcoin rewards with every purchase, which is actually you get more than the Coinbase one or the BlockFi one or anything like that. It's called Fold. And there's a lot of good stuff in there because my goal is to help you accumulate, because that's the name of the game. HODL is one thing, but you want to grow your account. You want to grow your holdings. And if you can do that without necessarily putting in more cash, especially in a bull market, that is ideal. But if you can do it, and if you can accumulate without having to put in more cash, that's the way to do it, period, regardless of whether we're in a bull or a bear market. So hit the like, hit the sub, and I will see you next time.